Don't think we can do a business planning session if we don't take a few minutes and at least have a discussion about taxes and some tax tips. So let me give you some advice on taxes. My first suggestion is don't mess with the tax man. Unfortunately for me, I have a lot of experience with them, and I can tell you they're like the four horsemen of the apocalypse. It's a battle you're never gonna win. Even if you win in appeals court, tax court, you lose because of the amount of time, effort, energy, and the resources that you had to apply. So the reality of it is you should probably just ask for what you're entitled to, and you should pay your taxes on time. You should file on time. But here's a good tip. Get a really good accountant. Now, a good accountant isn't somebody who knows how to break the rules. That's not a good accountant. A good accountant is somebody who knows how to keep you inside the margins so that you don't get into trouble and you don't get any inquiries. But when you do, and if you stay in real estate long enough, and you're going to get the tax man's going to want to do an audit. When they do, I don't want you to get all upset or all nervous or fret about it. Again, a really good accountant, you reach out to your accountant and you say, I'm getting an audit. They say to you, no problem, I've got you covered. I'll handle the tax department. You go out and sell more houses. If I need you for anything, I'll call. But this isn't my first day at the rodeo. I work a lot with the IRS or CRA. I handle all of that stuff for all my clients. So don't you worry about it. If I have any questions, I'll call you. Now, don't be surprised if the auditors try to call you and ask you some questions. Now, my experience, what I've learned is that you shouldn't talk to the auditors. When they called me, what I was told by my accountant is to tell them you have an accountant on retainer, that it's not your job to answer those questions. In fact, some of the answers you may give may not be absolutely accurate because you don't do all of the bookkeeping for your operation, for your sales desk. So when they call, and if they do, say, no problem, my accountant's expecting your call. Give them your accountant's name and number. If you have to sign a letter of authority, you can do that as well. I've had to do that before. But the point is, redirect them back to your accountant. Now, if you don't, they will ask you questions they know they're not supposed to, but they recognize you don't know, so they'll ask you things they shouldn't. On the other hand, they won't ask those same questions of your accountant because the accountant knows what they're allowed to do and what they're not allowed to do. So again, if they reach out and they want to talk to you, deflect them over to your accountant politely, and that's what you're paying your accountant for. So my first tip is get a great accountant. Second tip is when the four horsemen of the apocalypse come calling, don't answer the phone. Just deflect that call, that conversation over to your accountant. Now, in real estate sales, it's not what you earn, but it's what you keep. So it's that constant balance that we talked about earlier. We want to make sure that we put enough money into our business that it generates the revenue we're looking for. On the other hand, we don't want to spend too much money, otherwise it affects our expenses. So if you don't spend enough, you don't generate enough revenue, and then you don't have enough money after the exercise is over. On the other hand, if you generate enough revenue, but you spend too much money to create the revenue, again, there's not enough money at the end of the exercise. So it's always this balance, and that's why we do the plan and monitor the plan to see exactly where we are in relationship to where we want to be. Now, commission salespeople get some really great tax benefits. In most cases, all reasonable expenses can be written off in terms of driving and generating revenue. So if it's a reasonable expense, you're allowed to write it off. The word is reasonable. So if it's not reasonable, you know that that's going to flag the tax man, and they're going to want to come and have a look to see what's going on. And you don't want those four horsemen of the apocalypse visiting with you. So my suggestion is only ask for what you should. And I would go on to say that planning a meeting at the starting of the year with your accountant is the way to go about this. I would book a meeting with the accountant at the beginning of the year, not to go over. See, let me put it to you this way. Most people with their taxes show up in April, most salespeople show up at the accountant's office with a shoebox full of receipts. That's an absolute mess. And they say to the accountant, here, fix this. Well, by that point, it's too late. You know, the horse has left the barn. Closing the barn door doesn't make any difference. It's too hard at this point to put the toothpaste back in the tube. So what I'm going to say to you is start with a meeting with the accountant. Have a discussion about what you're forecasting from an expense perspective, what you're going to be investing in your business, what capital purchases you might want to make this year. You know, what are you doing with your hardware, software, automobile, and marketing? The point is the accountant will be involved in your forward thinking and help you with your planning and your strategy. And the other thing I would say is from every sale, make sure you set a little money aside in a bank account so at the end of the year, your tax bill doesn't jump up and smack you in the backside.